Generation wars. What's happening with Gen Z, boomers, and realtors. Also, we're going to share who's moving where and what are they looking for once they get there.
Then we'll wrap it up with how mortgage rate works, where they're hitting, and what's going on with inventory. This is Real Estate Backstory, and my name is Ming Richardson. I am the compliance broker for Maximum One Realty and Realtor Partners.
And I'm Alan Richards. I'm the managing broker here. And so we do this every week where we kind of go over all the comings and goings, the things happening in the real estate world. And we want to kind of jump right into, like, not necessarily the generation wars, but there are a lot of generational differences and how that applies to us here in real estate. First statistic we really kind of want to throw out there is that the typical realtor is a 55-year-old white female
Who attend college and is a homeowner.
and so I just say that in a context of that is the typical realtor is 55 years old. And the reason I'm pointing that out is there was a new study done by LinkedIn, and they said where 1 out of 5, when it comes to Gen Z, a large portion of Gen Z have not had a conversation with somebody over 50 in the last year. Okay, I'm not, and this doesn't count family, but other than family, most Gen Zers have not had a conversation with anybody over the age of 50. And they're not looking out to try and have conversations. It doesn't mean that they are not going
won't.
Right. And so our millennials and our Gen Zers are not necessarily going out of their way in order to have conversations with someone over 50. And when you put that together with the fact that the average real estate agent, the average realtor is 55, how are we going to be able to
how are we building that relationship part?
Yeah.
Because honestly, if you are the average realtor age, it is good for you to think about this because you need to get in touch with them and make the initial contact and understand their space. If you don't, there's no communication, there's no relationship.
So for us Gen Xers, boomers, that kind of stuff, if you want to be able to have conversations and build relationships with Gen Z and millennials, you have to be
make the first step.
That's right. You've got to be the ones who takes on the task, the role of being the adult in the conversation, right? Our younger folks in our society are just not going to reach out. And I'm not trying to point fingers. I'm just saying, like, this is just, it's true for what it is, right?
And normally if they do reach out, it's because of recommendation of their parents, because their parents have a relationship with you, and therefore they will recommend their child or children to utilize you.
So all we're saying is please don't think, well, I don't hear, I don't work with a lot of younger clients and that kind of stuff. That means that you're not reaching out. You have to be the ones who initiate contact out there. Now, on the other end of the spectrum, so we have our younger buyers, our Gen Zs, our millennials, that kind of stuff. But also on the other end, while we're in this whole generational war thing, what's happening with the boomers, right? And so for the vast majority of our boomers, they are kind of looking at retirement and how what's going on with retirement really has an impact on housing, right? Because there's the study that just came out is that when they reached out to boomer homeowners and said, look, like how comfortable do you feel in retirement? And overall, it's a very positive. However, a lot of our boomers are planning on retiring in place. 7 out of 10, roughly 68% of boomers, they're very confident that they're just going to stay in their existing home.
Unless they have a reason to move, that would mean their children or family that they know are stabilized in the area. Otherwise, they know they can't be chasing their children out at all times.
Well, and there's been a lot of talk about this. It's called the silver tsunami. Like the boomers were going to move out and open up these houses, and what we're seeing is that the boomers are really pretty happy now. But and that's for 70%. That's a significant percent. However, 32% are still open, right, to moving at some point, right? And so of the folks of that 32% who are saying, okay, I will consider moving, right? 66% are saying that they're planning on downsizing. So when you're reaching out to folks who are really thinking, understand that that's going to be a very common theme.
Mm-hmm.
We hear that a lot, like, oh, we're going to downsize, we're going to downsize. Now, part of that, at least in our experience, is it's not necessarily, I don't think that they mean it as a lie. We just don't see it, like they're like,
Uh,
well, we want a smaller place and we want this and this and this. And then, like, well, I need a prayer room and where are we going to put our piano and da 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 da. What happens when
uh,
the
unless they
grandkids come
make it,
over?
yeah, unless they make a mindset that they want to get rid of a lot of excess they have collected over the year, it's hard for them to downsize.
But they will all, or not all, but like 66% will still say, look, we do want to downsize. They
Downsize.
plan on downsizing. Now, what about ADUs, accessory dwelling units? Because a third of those folks said that they would consider living in an accessory dwelling unit. So, like a carriage house, a guest house, those kind of things.
Only is in their children property.
Only, right? So, like what we're not seeing is no one's looking to downsize and then move on to an ADU for somebody else. This got to be
Correct.
family. Family is the only ones that would consider it, right? And so they would consider moving to their child, or they would be fine with their child moving on to, or their family moving on onto an ADU on their property as well. And so, like that's one of the important aspects of there. So, whether we're dealing with our younger or older buyers and sellers, the whole idea is that, look, when it comes to building relationships, it's about trust. Okay, it's not about, I don't only hang out with old people. I don't only hang out with young people. I don't only hang out. You know what I mean? This is on us to make sure that we are the ones who are reaching out and engaging with clients.
It's all down to relationship, like we have been preaching for a while. So, but let's talk about the 20 state with the largest net migration.
So, I mean, like when you look at where people are moving to, Georgia actually ranks pretty high at the top. We come in at number 5 with a net migration of over 88,000.
88,000 folks.
Yeah, 88,325 if you want to be it. So ahead of us is going to be Florida, Texas, North and South Carolina, then us. Then comes Tennessee. So overall, the South is pretty heavily represented here, which is kind of a good thing. Now, where folks, if you just look at overall migration patterns, where are more folks moving to? Most of the folks who are moving state to state, almost half of them are moving to the south.
46%. Yeah.
And so that's why we kind of fall right in that nice little range. Right, all around us is heavy migration patterns, and so that is one very interesting point. Is that a lot of folks are moving to the south. We have moderate weather. We don't have as many. We don't have hurricanes. We don't have a lot of. I mean, we do have fires and that kind of stuff, but not nearly as many. Now, what's also interesting is that even though more people are moving to the south, guess which area more people move from?
South.
The south. So like we move around down here in the south. So like there's we're seeing a trend where more people are moving from Florida into Georgia. And so like that's still a really good move for us. I think a lot of people kind of try the whole Florida lifestyle kind of thing, and they're like, okay, we like it warm, but maybe not
quite as warm.
not as windy kind of thing. And so, like in this same study that they did, they said, okay, where are they moving to? And so, in the South, more people are moving state to state, right? That's just one of the biggies that we've kind of seen, is that people are moving state to state. Now, what month do most people move? Well, I mean, what month has the highest number of when people move?
You guessed it, during summertime in June.
June, yeah. So like if you look at April, May, June, those are the 3 highest months, with a peak being in May. After that, it kind of falls off. But we see where a lot of folks plan on moving around school systems, summer times, those kind of things. It is. Of the folks who are moving, roughly 97%, for most folks moving, it was a permanent move. Like it wasn't a temporary. They weren't. Let's keep a house here and that kind of thing going on. Now, when we poll the folks and say, look, why do you want to move, or why did you?
What's
choose?
the reason?
Yeah. Why did you choose to move here? And so the number one reason, like by a really large margin, the number one reason was
family and friends.
The biggest one. Folks want to be with a sense of family, community, friends. They want to feel a part of that community kind of thing.
And the next one's more home for the money. So we all know you can sell a home up in
Well,
north and come down here and live in what you consider
here
a
in Georgia,
mansion.
we have a lot of good value. I know
Hmm.
that if you've been here for a while, you may feel like, gosh, is there really good value for money? Yeah, compared to a lot of places in the U.S. I mean, like we've seen property value appreciation, but other states have seen the same appreciation.
Correct.
So, like, yeah, in Georgia, generally speaking, you can get a lot of home for your money. Also, some folks move because of favorable taxes
Yep.
and
No
tax.
state
Yeah,
taxes.
well, we have state tax in Georgia, but some
In
of the southern
Florida,
states don't.
yeah.
That kind of stuff. Folks also move to areas with less crime. Uh,
Closer to work location is always a plus.
well, and actually, the closer to work one, that one's kind of interesting because in the past, closer to work was a more important factor. We saw that much higher on the list back in the day, kind of thing, where people
Before
are working from
pandemic,
home.
but
Yeah,
now because of pandemic, the
yep,
habit of company operations is a little different.
yep,
So folks are able to work commute only twice a week.
yeah.
So
And then, but the other thing that we see with folks who are moving, right at 11%, basically 1 out of 10 is moving back to an area they moved at before. Like
mhm.
they lived here in the past, or they lived in this area in the past, and they're like, remember when
We
we used to
really
live in
love
so and so?
it.
We loved it. Let's
Yeah,
go back there, kind of thing.
absolutely.
Now, to
Some
move
of the
it further,
reason,
but I
yeah,
mean, like if you dig a little bit deeper and say, okay, but why did they choose for folks who are moving? Now this is specific to folks who are moving, who moved moved state to state. Why did they choose a specific home? And this one we found to be pretty interesting, right?
interesting.
Right? Like the number one thing they were looking out for was
Outdoor space.
we didn't think that would be the number one thing, right? Outdoor space, and I get it. We're kind of the same way. I mean, it can be 1,000 degrees outside, and we're going to be out on the front porch, kind of thing, swatting skeeters and doing that kind of stuff. But like outdoor space is a big deal,
Next would be more square footage.
and that goes back to value, especially
Correct.
here in the South. We do have a lot of good value for your money in here. Uh,
And a third would be the quiet area because hustle and bustle Atlanta and the traffic real rage. By the time you get home, you need that calmness.
Well, we've seen a lot of people, like suburban, ex-suburban,
Mhm.
even rural has really been very popular for several years now. More folks are wanting walkable neighborhoods also.
Absolutely.
Well, and so even though there's a shift to going rural, but there's also a shift to being more urban. It's the same,
Correct.
some people just want to, live, eat, work, play, those kind of things, those kind of communities. Condos are still really, really better in there. After that's going to be commute, right? And so the having a reasonable commute, that tends to be heavily dependent on job, right? If you got a job you got to go in every day, well then
That might
then
make a
commute's going to make a
difference.
big deal. But if you're not,
Absolutely.
then maybe not so much. So um,
So let's talk about Federal
yeah.
Reserves because let's talk about mortgage.
Well, so this past week, the Federal Reserve cut the benchmark rate, and they cut it by 25 points. Everyone in the world was basically saying they're going to cut rates. They're going to cut rates, and so everyone expected them to do it. They did what they were already expected to do. So, or they did what everyone expected them to do, and so the challenge is that the markets had already priced in the fact that the rates were going
To
that
drop.
federal rates were going to change, kind of thing. Now, one thing that happened is that like in that same meeting where they lowered the rates, they said we're not sure we're going to keep lowering rates as aggressively next year as we thought we would.
Well,
Um,
they want to avoid the inflation creeping up quickly, and because we have different sitting president this coming up, so it just depends on the policy and how everything's going to be.
Yeah, but the Fed's
Um,
general, like the Fed's instructions are to keep inflation low and
mhm.
jobs plentiful, and so they're just kind of looking at all that kind of economic data out there. And so even though the Fed dropped the federal funds rate by a quarter point this week,
The mortgage rate went
mortgage
up.
rates went up, and so like it didn't go up a lot; it went up just a little bit, kind of thing. But you got to understand that the federal funds rate does impact mortgage rates, but it's not the only thing and so we want to kind of just
It's
cover
one
that
of the
really
big
quickly.
pieces in the past, but because we have such a fluctuation of rates, so now they're stepping back and looking at some of
Well,
the
yeah, but
factors.
let's look at kind of like where we've been, where we're going, that kind of thing.
Sure.
So first thing is that when inflation reared its kind of ugly head, the Fed came in what 2022, and
Hmm.
they really they raised the federal funds rate several times, really large cuts. They went in and just kind of shocked the market in here, kind of thing. And so this past year is when the Fed has started kind of easing back on those
Hmm.
rate cuts a little bit. And so you know, the 10-year or the mortgage rates continue to kind of fluctuate right now because that's not the only factor that really affects mortgage rates, and we have to understand that. So one of the big things is that the economy is highly connected to the market, and what
The
I mean by
treasury
that,
bill.
and especially the treasury, because see, like when you're talking about the markets, we're really talking about investments like stocks and those kind of things, but we're also talking about treasuries, T-bills,
Hmm.
those kind of things,
Right.
and they tend to work like in reaction to each other. So in times when the market is really, really volatile, many investors will move
Move their
out of
money.
stocks and they'll move into treasuries and move into treasury bills, that kind of stuff. Because if you really look at it, our our uh, our 30-year mortgage rates follow along with the 10-year treasury. If you laid out the 10-year treasury and you laid out mortgage rates, you'll see a direct correlation. When the 10-year treasury goes up, mortgage rates go up, and the same thing that goes down. And so anytime more investors move over into treasuries, the price tends to go up and it tends to make the prices a little bit higher. We've had a lot of market volatility, especially in the past week or so, last couple of weeks, and therefore more people are moving to a safer investment kind of thing.
Which is the treasury bill.
Now, in addition to having this 10-year treasury that is highly influenced by the market, we also have this thing called the spread, right? And the spread, that's the difference between what the 10-year treasury is and what a 30-year mortgage rate. And that spread is really valued heavily by risk, by how long they think that folks are going to hang on to the mortgage. The average person keeps a mortgage 8 years, just FYI. But like that spread, even though it is risk, there is another factor which goes into play here, and that is the Fed itself, which is another weird thing. See, one thing that happens is we have this whole thing called the secondary mortgage market. In the secondary mortgage market, that's where people buy and sell and trade MBS, mortgage-backed securities. And so during the pandemic, the Fed bought mortgage-backed securities
A
out the yin
lot.
yang, right? And that really helped to keep the rates super low. That's why we keep seeing, everyone remembers 3% rates, 3.5% rates. That happened because the Fed was buying down a
All
ton of
the
treasury. I mean,
secondary.
a ton of mortgage-backed securities. Well, for the past 2 years, the Fed has been selling mortgage-backed securities back off. So we have a whole lot of these mortgage-backed securities out into the marketplace where people can buy them, and because there are so many, that's part of the reason why we're
Keeping the
seeing the
interest
spread
rate. Yeah.
as high as it is. Now, the good news here is that the Fed should, and this whole process, just so you know, is called quantitative tightening. And so the Fed should stop quantitative tightening or buying of the more, or they should
Selling.
start selling off the mortgage-backed securities in 2025. That alone should help to lower mortgage rates. So, like when you look at like where are mortgage rates heading? So, some of the factors that are definitely going to impact our mortgage rates moving forward. First one,
Inflation.
right, exactly. And we are seeing inflation moderate right now. It's always going to be a
Right.
little bit like this, but one of the biggest components affecting inflation is housing, or the dwelling costs, and those have been coming down, but the data tends to be a year late.
So next is unemployment rate.
And that again, bouncing around, we can't, from one month to another, we just can't figure out which way it's going, but it's still, there's more jobs than there are people for
Right
them right
now.
now.
And the last one is government policy. So once again, because we're moving to a new policy administration, so this is a little bit right now, even though federal has cut their funding
Well,
cuts, but the fact is that they don't know what
we have
policies is really going
the
into
Trump
next year.
administration is coming back in, and there's a lot of talk about tariffs, and no one really knows what that's going to do. There's a feeling that if a lot of tariffs are imposed, that's going to drive inflation up. So the government policy does have an impact, but that's all speculative on that
Correct.
kind of thing. So when you put all those kind of things together, we are looking at mortgage rates continuing to moderate right now. We are looking where the rates are in the high sixes right now, mid to high sixes, I guess, 6.6,
And we're hoping
6.7.
that'll come down to low sixes. And so it is
Yeah,
important for you to educate your client about having good credit score, because their credit score, it will make a difference in their mortgage rate.
absolutely. So now, part of the good news here, things that's going on is, even though we have a lot of market volatility and it hasn't been the greatest year from a transaction side of things, we are heading into several months now where existing home sales have moved up and are continuing to move up.
Thank you.
And so we're glad to see that, which is not normal necessarily for this time of year. Normally, just the normal trends are down, but we are seeing that kind of trend kick in. In addition to that, we're seeing where new listings of homes,
Is
total inventory,
increasing.
yeah, it's up what, about 8% right now. So new listings, new properties coming on the market, that's about 8% higher than it was last year. Now, over time, this is also leading to positive total inventory, meaning the total amount of inventory we have has been slowly, steadily growing. Gosh, since spring, just about. What we've seen now, some folks will say, I'm kind of worried with that much inventory coming into the market. Inventory is up pretty significantly this year over
But the
last year.
inventory is still lower than pre-pandemic. So and we were in a pretty healthy market right before pandemic.
Even before the pandemic, we were we
Right.
were we were in a healthy market. Right now, so even though we're seeing where new listings are up, total inventory is up, we are still riding about 6% lower. For in the Atlanta metro area, we have about
percent
6.2, yeah,
less.
6% less total listings than we had before the pandemic. So even though we are moving kind of like at a snail's pace to a more balanced market, that's really where we're heading. We're heading towards much more of a balanced market. It's really kind of good to see. Now, some things that are really impacting that, and or how that what maybe not impacting, but how this is turning out in reality. First thing is that good properties in good areas priced right are still selling quick, right? So 26%, 1 out of 4 of our listings right now are under contract within 2
2
weeks.
weeks.
So those homes that are priced right in good areas,
And believe it or not, Ella, the home that has been sold, 24% home sold above their final list price.
so we still have we have a lot of transactions going on out there. We have more transactions going on now than we have last year. Well, there's still a lot of positives of the market. We are moving into a balanced market. It is not a place where the seller, can
It
dictate
depends on the
everything
price
what's
point
going
too.
on.
And also, once again, depends on the property condition as well and
Yeah.
location.
So good price properties, good areas. We still have to make sure that we're ready to move on those quickly and
Absolutely.
not really muck about, because what's the saying, Ming?
If you sleep on it, you won't sleep in
There
it.
you go.
So,
So
thank you, Letty.
anyway, I hope that this is helpful. If you need any more real estate ideas, tips, tricks, kind of follow one of our masterminds that are at the end of this recording here. We hope that you guys have a really, really great week. If you want to connect with us, you can find us on mx1training.com. That's where our training calendar is. We have a lot of live trainings there. You can also just reach out to us, give us a call, give us a holler. We'll help in any way we can.
Thank you so much and have a great day.
Bye.